All right, bye-bye.
Okay, we're ready to, okay, all set.
All right, well, thank you, Sherry. So
You're welcome.
before we call the meeting to order, I believe we have a new member of our board. And so, Councilwoman, welcome to the Board of Investment Commissioners. Councilwoman, you want to introduce yourself very quickly and just let us know, like, very quickly who you are.
Thank you very much. Thank you for the warm welcome. I'm Providence Councilwoman Joanne Ryan. I represent the mighty 5th Ward, Elmhurst, Mount Pleasant, and some sections of Manton neighborhood. I've basically grown up in Providence, lived here my entire life, and raised my family here as well. I am proud to serve, have recently been elected to the Finance Committee of the Providence City Council. I've served as chair of ordinance. I have served as the majority leader. I've served as the majority whip. And now I'm focused. I actually have 40 years in the banking industry in Providence as well. So I'm elated to serve as the chair of the Finance Committee, and I'm happy to serve on this board as well. Look forward to working with you all. I love Providence. We've got a bright future, and we've got some bright people focused on making sure our future is indeed bright. So thank you all.
Wonderful, and welcome to the team. Okay, so it is 12:04, and I will call this meeting to order. Sherry, can you do a roll call attendance vote, please?
Mayor Alorza,
Present.
Vice Chairman Lombardi is absent. Councilwoman Ryan,
Present.
Ms. Silveria,
Present.
Mr. Costello, Mr. Costello, Mr. Hirsch,
Present.
Present.
Mr. Winkleman is absent. We have 5 present and 2 absent. We have a quorum.
All right. Well, thank you everybody for making time and for being here. I really appreciate your service to the city in this capacity and in everything else that you do to help move our city forward. So thank you for your time and your involvement. We'll get started with matter number 1 on the agenda. It's the investment performance analysis. And is Eric on the line?
Yes, Mayor.
All right, Eric, good to see you, and please take it away.
Thank you, Mayor. Hello, everyone. As is our standard procedure, if you would turn to page 4 of your electronic package. It's also called page 1 at the bottom of the physical page, entitled Current Estimated Investment Position and Performance Analysis as of May 14th. So we have given you a flash report through last Friday, and you can see that the rally, I'll cut to the chase, the rally in markets for the most part has continued. We are up, as you can see, 1% month to date, May to date through the 14th, bringing the year-to-date return to 8.9%. You can also see that very recently the value exposures in the portfolio continue to do better relative to growth. The growth exposures, which we've talked about many times in the past, that has continued. And large cap has done better than small cap in general lately, especially on the growth side. Value has continued to do better. This is also true internationally. You can see that with our international equity exposure. So on the equity side, things continue to do quite well. You can see our domestic equity is up 14.2%. Our overall equity is up 14.1% so far year to date. And while bonds have had, at least through Friday, a slight rebound, up, maybe 0.1%, as you can see. They're still down 1.2%. That's related to, of course, rising interest rates, as everyone has been, as we have been talking about and everyone has been noticing. And very recently, we see that inflation has been what's on the minds of investors globally. This is a global trend. Inflation has been picking up here in the United States as we come out of the pandemic mandated shutdowns across the country. And of course, with the good news on vaccine rollouts and cases falling, thank heaven, the economy has been surging for the most part in recent weeks and months. And so interest rates have gone up, and inflation expectations, either from surveys or extracted from market prices, when we look at, say, nominal treasury bonds and TIPS, those are inflation protected securities, we see that inflation expectations have gone up. And indeed, reports of inflation, you may have seen the CPI report just the other day that was accelerated rapidly. Now, some of that is due to base effects. That is, the year-over-year numbers have that effect. In April and May, March, April, May of last year, for example, prices were plunging because of the onset of the shock in the pandemic. So those negative numbers, those falling prices, fall out of the year-over-year comparison. And now we have prices recovering, and we see inflation increasing noticeably in the last month. I think that's going to continue, some because of these base effects that we have discussed, and markets, I think, know that as well. At least for a while, that's going to continue and will be a source of volatility for sure in markets, both in equities and fixed income and commodities. For example, you may have noticed going up quite a bit. Oil is up 30% year to date. Copper's at an all-time high. Lumber prices, if anyone is trying to build a house or an addition, very strong as well. So very recently, inflation, and how long will it last and how high will it get? Will it be temporary? Those are the types of questions that are causing the volatility in the markets lately. So far, the Federal Reserve has been sticking to the story that it's temporary and transitory, and is going to continue with its very accommodative monetary policy. For example, they're buying $120 billion a month to increase their balance sheet, $80 billion on treasuries, $40 billion on mortgages. And of course, Fed funds, or the front end of the curve, are pegged at zero. And so markets are wondering how the Fed may react to this. They keep saying, and they believe, and they are acting as if it will be temporary. There are some bottlenecks right now as the economy opens back up. You may have heard about the chip shortages, computer chip shortages, especially in the auto industry. Those, try to buy a used car or a new car right now, and you'll see some sticker shock, perhaps. They can't get enough of those. So other bottlenecks in the economy are there that not predicted to last a very long time, but I don't think they're going to stop, this month or next month. I think they're going to be around for a while. So as we've been saying, we think there's going to be more volatility, downswings and upswings, like we have seen over the last 12 months since the initial shock of the pandemic. There have been several quick and sharp sell-offs in the markets. I like to remind folks, last June, for example, S&P sold off 8.5% in 3 days. Then in September and October, you had sort of a 7 to 10% sell-off. We had an earlier sell-off of similar magnitude here back earlier this year. Last week was a very volatile week with 3 big down days and then 2 big up days, and of course down again today. So I think that type of behavior is going to continue, but so far the strategic asset allocation of the portfolio and the work that the board has done and the managers of the portfolio, and quite a bit of passive as well, as you know, has been working to the advantage of the portfolio and is up again just under 9% year to date through Friday. So pretty good report. Be happy to take any questions at this time, Mayor, after the summary. Thank you.
Great. Thank you, Eric. Are there any questions or comments? Any questions or comments? Okay, if there are none, then I will entertain a motion to accept the investment performance analysis as just delivered. Is there a motion?
So moved.
So moved by Commissioner Ryan. Is there a second?
Second.
Seconded by Commissioner Hirsch. Any discussion on the motion? All those in favor, please say aye.
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 Are there any opposed? All right, the ayes have it. The investment performance analysis is accepted, so thank you. Move on to matter number 2. Eric, please walk us through a discussion and/or decision relative to rebalancing the portfolio.
Mayor?
Yes, Mayor.
Excuse me, Eric, one second. I just want to let you know that Mr. Lombardi did join the meeting.
Okay, wonderful. Welcome, Commissioner Lombardi.
He's muted.
Okay, go ahead, Eric.
Thank you, Mayor. Okay, folks, if we could turn to pages and we'll go over the rebalancing recommendations, which is what we do on a regular operating procedure when necessary. If you look at electronic pages 12, 13, and 14, you'll see the written up version of our rebalancing recommendations, as well as a spreadsheet showing everything on one page. That would be on electronic page 14 or physical page 11. And it would show our recommendations to rebalance the portfolio given the liquidity needs, et cetera, for this month and relative to where the portfolio is compared to our targets. So if you look at the spreadsheet, for example, you will see that we're recommending using $2.3 million in cash from a contribution that is expected before the 21st of May, this week, and redeeming and selling some equity exposure in that column called immediate rebalancing. You'll see the red numbers. So for example, redeeming a total of $11.65 million from equity managers in those amounts, $1.75 million from the value index, $3.3 million from Boston Partners mid-value, $3.3 million from small value, Boston Partners small value, and $3.3 million from Brandis Investment Partners. That would raise $11.65 million. And using those proceeds, the cash and those proceeds, we would pay the $7.5 million in cash for this month's benefit payments, and utilizing the rest of the money, as you can see in that same column, we would recommend adding $2.7 million to Luma Sales, $2.7 million to Vanguard Intermediate Term Treasury, and just over $1 million to Vanguard Total International Bond Fund. So those moves, in addition to, as you see in the column to the right, titled Pending Rebalancing with Renaissance Redemption, a couple of meetings ago, the board voted to redeem $8 million from the Renaissance Fund. That money will arrive in about 3 weeks. That will be coming by the 10th business day of June of next month. So that would be also recommended to go to Luma Sales. And at our current market values, and with those rebalancing recommendations and those inflows and outflows of cash, you can see in the major column titled After Immediate Rebalancing, what the dollar and percentage values would be, the resultant values, what they would be in percentages relative to our target. And so, for example, our target is 26% on fixed income, and we would be right at the target at 26%. We would be 3.7% under the target on equities for that short period of time, which is a result of a pending vote or a pending recommendation to consider on a further second rebalancing, redemption from Renaissance. Again, in a previous meeting, the board voted to bring the target exposure of the Renaissance Institutional Equity Fund down to about 4.5%. Now, it has performed nicely lately, but we still need to make another redemption to get that down to target. So you could consider a $13 million redemption vote, as you can see in the second column, second main column, and it's titled Additionary Preliminary Rebalancing. So to get Renaissance to target, and therefore everything to target, all categories, that would be required. And if the board were to accept that recommendation and vote on that today, the money would arrive by the 10th business day of August. So we have an immediate rebalancing, which I have described, which gets our fixed income allocation to target. We would be, just for a short period of time, slightly overweight on our equity hedge funds, slightly underweight on our long-only public equity, and that would be adjusted by the second rebalancing recommendation from Renaissance. So it's a busy page, but it addresses the cash flow issues, and it addresses the final move to the new target asset allocation, which was adopted by the board over the last 2 or 3 meetings. So I'll take questions or amplify any points that you would like, Mayor. Thank you.
Thank you, Eric. That is a lot of information. Are there any questions?
Yeah, Eric, could you just share with us, if somebody put that back on the screen for a minute, if you would, the exhibit, the screen share, could have that back? Thank you, Sherry.
You're welcome.
Just share with me the process in May. We're going to pull, let's say, $3 million from Robeco, and then 3 months later, we're going to put $1 million back in. And there are several like that as you go down the column. What are the plus and minuses of doing it now and then replacing some of it rather than do it all at once? Are there extra costs involved or cost savings? I just want to understand
it's really guided
rationale.
By thanks, David. It's guided by getting our fixed income allocation to target. As you know, it often runs under the target because that is the reservoir or the source for monthly benefit payments, and at $7.5 million a month, that's 2% of the overall portfolio. So each month that goes by, in order to fund those benefits, you move 2% out of the portfolio. Now, so number one, get the fixed income to target, and with our equity hedge fund temporarily 3.6%, 3.5% over target. That is equity. So at least your overall equity type exposure, when you consider hedge fund equity exposure as well as long only equity exposure, would be on average at target. The board has voted with respect to the second. The board has voted to bring the Renaissance to 4.5%, which requires a redemption of that size. And so at that time, you would, the thinking is you rebalance your equity exposure back up to where it is supposed to be. And the benefit is along that time period, over the coming 1, 2, or 3 months, the fixed income exposure is where it is supposed to be. So fixed income is on target. Now, we call that preliminary for the August rebalancing because, well, markets will move between now and then. But also, we've been informed that there could be a large contribution by the city between now and then. So that could change. We could have an inflow of cash between now and then, and that could change it as well. But we did want to at least make sure that we get the recommendation for the second required redemption from Renaissance in order to get to the newly voted long-term target of 4.5%.
Okay, thank you.
Yes.
Are there any other questions or comments? Okay, if there are no other questions or comments.
Mayor, excuse me, I think Mr. Lombardi has his hand up.
Oh yeah, I was about to call on him.
Thank
Go
you,
ahead,
Mayor.
Commissioner.
Thank you, Mayor. So I just wanted to go into Renaissance for a second. Obviously, that is something that I supported lowering the percentage of. But as we go into the volatility of the market, Eric, is that something that would almost work the opposite of the market, or as the market is more volatile, is that an issue with, I mean, does Renaissance do better in those environments?
Well, sometimes yes, but not always is the answer. So if you look at your flash report that we spoke about earlier, you'll see that Renaissance is actually up 6.6% month to date this month, with the market down, 10 basis points. So it can happen. This month is an example. However, last year Renaissance was down with the market up. So there's no guarantee one way or the other. Literally, anything could happen. It is both long and short. That's what it does. It goes long and short various securities. So it's possible it could continue to go up in this environment, but no guarantee, Mr. Lombardi.
Okay, and just, I don't know, obviously, what everybody else feels like, but it seems that in my opinion, the market seems to be overbought or oversold. I don't know what it is, but it's higher than I think it's going to be in the future. And again, the experts may disagree, and I would respect that. If we look, I mean, and I know that I don't want to start changing percentages, but should we be moving to a more conservative type portfolio?
So Commissioner Lombardi, let me try to jump in and see if this addresses your question. So we regularly hold sessions where we put reallocation conversations on the agenda.
Yes.
And these reallocation conversations should happen periodically. So I'm not sure when the last reallocation conversation happened, but frankly, let me make 2 points. First is we should have at least an informal, if not a formal policy around how often we have that reallocation conversation. And second, we should have the reallocation conversation on a regular interval, at least once a year or more, depending on what the best practice is. But if folks want to continue this conversation, we can certainly tee this up for a reallocation conversation in a future meeting. And perhaps I can ask some of the folks who are familiar with this work the most, what the best practice is in the industry around reallocation discussions and decisions.
Yeah, I don't think it's something that it is something that really needs to be long-term in nature. Mr. Lombardi's comments are very accurate. I mean, and they echo what Eric said earlier, that, you know, you could see an 8 to 10% drop pretty quickly. But if you reacted to the 8 to 10% drop last year in September, you'd have missed the majority of the return for the year. Or if we had rebalanced back in the real ugly period, we'd have missed even more. So it's timing the market has been proven impossible. So I think you're really benefit from having a very long-term approach. That being said, you probably do need to look at it at least on an annual basis, more or less, to confirm what you have. And I think if the thing that would probably impact it the most is if the liquidity or the cash flow of the portfolio change dramatically, then you might have to look at restructuring it. But if all of the other factors, market aside, are the same, it's not something I would tweak, or I would make significant adjustments to it on a periodic basis.
And Michael, is it your experience that reallocation conversation should happen about once a year?
I think that's reasonable. I don't know what Eric and Jeff, how often they do that with their other clients. But kind of a confirming of the allocation, and, you know, a lot of times it's also, you know, done with a liability analysis as to, you know, matching the assets and the liabilities. But
Eric and Jeff,
Yes.
how often would you recommend?
Yes, I think in previous meetings, we had discussed trying to do that once a year, Mayor. We just did it in the March meeting. A new asset allocation was adopted at that time. So I think once a year is a good practice for sure, and be happy to, you know, stick to that schedule.
Okay. Commissioner Lombardi, is that satisfactory?
Yeah, it is, Mayor. Thank you very much.
Thank you. Commissioner Lombardi, can I come back to you? Unless there are any other questions, let me ask that first. Any other questions or comments?
No, Mr. Mayor.
Okay. So I'll entertain a motion to enter pages 9, 10, and 11 of the presentation as Exhibit A. Commissioner Lombardi?
I'll make that motion. Mayor, thank you.
Thank you.
Second that motion.
As seconded by Commissioner Ryan. And any discussion on that motion? All those in favor, please say aye.
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 Are there any opposed? Okay, so pages 9, 10, and 11 are Exhibit A as part of the official record. If there are no other questions or comments, I'll entertain a motion to approve the rebalancing as outlined in Exhibit A. Is there a motion?
So moved.
Seconded.
So moved by Commissioner Ryan and seconded by Commissioner Lombardi. Any discussion on the motion?
Roll call vote, please.
And Sherry will do a roll call vote.
Mayor Alorza,
Aye.
Vice Chairman Lombardi,
Aye.
Councilwoman Ryan,
Aye.
Ms. Silveria,
Aye.
Mr. Costello,
aye.
Hirsch,
Aye.
Mr. Winkleman is absent. We have 6 ayes. The motion passes.
Okay, great. Thank you. And thank you, Eric, for walking us through that. That was a lot of detail, and it's presented about as clearly as it could. So we'll move on to matter number 3, discussion relative to Dexter Donation Fund and other trust accounts. Back to you, Eric.
Thank you, Mayor. I'm just calling up the flash report. So if you look at your other package that has been provided, this package summarizes the smaller trusts, et cetera, that the Board of Investment Commissioners has purview over. They are listed in this package. They are all invested quite similarly. We tend to start with the Dexter Donation Trust, and you can see that that would be on page 1 of the package. You can see that month to date, it's down 40 basis points and up 8.5% year to date, again through May 14th. The same comments that I gave earlier in the presentation would apply to these other portfolios. When were you to scroll through and look, you would see that all the numbers are quite similar. Again, there's a little more equity in these portfolios, a little less fixed income, and no alternatives in the portfolio because of these portfolios, because they're smaller size. But strong returns year to date as well here in these portfolios. Again, you'll see up in the mid-8s year to date. So the other comments that I have given would apply here, and would turn it back over to you, Mayor, if there are any questions or areas of clarification.
Great. Any questions or comments?
Yeah, I just have one.
Sure.
It appears, if you look at the 1, 3, and 5 year returns, I'm using the Dexter Donation Trust as a proxy for the others. They're beating the core pension portfolio by over 300 basis points. The 5 years by 3.5, for the 3 years, maybe 2.8, and for the 4 years, almost 14%. So I think, when we review the allocation strategy going forward with all the statistics and discussion that goes with it, we might want to look to a model more like the trust, because in essence, to some extent, they're similar animals, not identical, but similar. And I realize it's because of the mix. You've got 65% equity target in the pension, but 80% in these trusts.
Yeah, thanks for pointing that out, David. Any other questions or comments? Okay, if there are none, then I'll entertain a motion to approve the investment performance analysis relative to the Dexter Donation Trust and other accounts. Is there a motion?
I'll move.
So moved by David. Is there a second?
Second.
Seconded by Commissioner Ryan. Any discussion? All those in favor, please say aye.
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 Are there any opposed? Okay. We'll move on to the last matter on the agenda, number 4, discussion relative to claims and litigation. Ken, are there no matters?
Nope, nothing to report, Your Honor.
Great. I'll entertain a motion to continue matter number 4 till our next meeting. Is there a motion?
Motion.
Second.
Motion made by Commissioner Lombardi, seconded by Commissioner Ryan. Any discussion? All those in favor, please say aye.
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 Are there any opposed? Okay, that matter is continued, and I will entertain a motion to adjourn.
So moved.
Second.
So moved by Commissioner Hurst, seconded by Commissioner Ryan. All those in favor, please say aye.
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 Any opposed? Okay, we are adjourned. Thank you, everybody.